Are Manhattan offices in huge trouble? Let's find out.
Manhattan's commercial real estate crisis is getting worse. Robert Frank joins us now with more on this. Robert.
Good morning, Melissa. Well, new numbers showing 94 million square feet of empty office space in Manhattan. That is an all-time record and equal to 37 Empire State Buildings of empty space. Empty space is up 75% since pre-COVID. The overall vacancy rate now at a record 17%. And there are no signs that this is going to improve anytime soon.
So it sounds like Manhattan office leasing is in huge trouble. According to the stats, there is 94 million square feet of office space available. And I will say, there could be even more. Why is that? A lot of landlords don't even list the space that's available because if everybody knows all the space that's available, prices are going to go down even further. Imagine it. You're an owner of a building and you have half of your building listed available on the market, but you truly have 75% of your building available. It's going to kill your leverage for any new deals and any renewal deals if the tenants and the brokers understand that you have even more vacancy. So truly, we're at 94 million square feet of available space. We could be at anywhere from 120 to 160 million square feet of available space. So we only know of 94 million. There could be even more. Let's keep digging in.
New leases were down 44% over the same month last year. And the office occupancy rate, so that's how many people are actually still coming to the office, that's been stuck in Manhattan at around 48% for the past year.
And the occupancy rate is 48%. Now, let's talk about occupancy rates. 48% occupancy rates, those numbers I think are going to be quite deceiving because we need to understand the source of that data. A lot of times this data is coming in from Castle swipe cards, which candidly, those cards are coming in from your A-class buildings. Your B and C-class buildings don't have swipe-in systems, so maybe the occupancy rate is 48% of the higher-end assets, but it could be much higher for the lower-end assets. I personally believe that the occupancy rates are slightly higher than the 48% because there's no way to really measure all the occupancy rates throughout Manhattan if you don't have card swipe systems.
You know, the REITs with concentrations in New York office space seeing big stock declines. Vornado trading at a 27-year low. CEO Stephen Ross saying the company is, quote, going to take a breath in its timeline for developing Penn Station. That's that $2 billion plan to develop 5 million square feet. Then you've got SL Green and Empire State also down. Other urban markets also in trouble. San Francisco's vacancy rate.
So we're talking about a few REITs. I think this is probably the bottom for many REITs that are based in New York City. When I say the bottom, I'm talking about the bottom of their struggles and the bottom of the stock price. The market is really bad right now, and I think the stock price has reflected something that's way worse. Aside from that, what does this all really mean for office leasing? This isn't just COVID, this is a change in habit. I think that the market is still recovering, but I do think in that the long term, office will recover, but it's going to be the higher end products. Your B and C class products, I think, will still be in a lot of trouble unless they renovate the properties and add amenities. If you can't renovate and add amenities, it is super hard to stay relevant in today's market.
Hitting an all-time record in the first quarter with nearly a third of office space now unleased. Melissa, this, of course, feeding into that regional banking crisis.
A lot of these buildings either refinanced, or secured initial loans on these products 2 or 3 years ago. What's happened since then? Like mentioned, occupancy rates have dropped and interest rates have increased. How is it possible to pay your note every month if your occupancy is down, if your NOI is down and your interest rates are up? There are so many buildings that are either selling or going into special servicing because they cannot carry the loan. So banks are definitely getting hurt if they have a high exposure to commercial buildings, and we'll see a lot of trouble for banks. We will see a lot of trouble for landlords. So yes, New York City office space is in a bit of trouble, but if you're a tenant, you are getting the deal of the century. So that's my 2 cents on the market. Hopefully you got value out of this. If you did, make sure to like, subscribe, and check out what we have coming on in the future. Until next time, I'll see you then.